Welcome to our first crypto course of the day, Cryptocurrency Compliance Basics. So we're going to talk some good discussions about regulatory and compliance. I see a lot of great faces here that I'm very familiar with and that should have some great feedback and some things to contribute to the group. What I don't want to do is spend a whole lot of time on the intros. Hugo did a fantastic job. I am very, very honored to be here. I've been part of the IMTC CrossTech conferences since about 2018 now, and always enjoy seeing familiar faces and being able to meet new people along the way. Usually I'm in a risk management course teaching that. I do a lot of work on the cryptocurrency side. I've been working in the crypto space since about 2018 or so for a little while. So hopefully I'll have some good things to talk about today for you guys. I see Joe, who is also going to be teaching one of our courses here a little later today, joining our session also. So definitely welcome the feedback along the way. Want to make sure that the group is interactive. In true IMTC fashion, we are off to a late start. So we have until about 10-ish or so for this session. So I will talk fast if you listen fast, but raise your hand and let me know if there's things that you would like to hone in on a little bit more, have more detail, and that sort. So first, I'd like to just welcome everybody here, just to get a little bit of sense of the audience. Who has some type of crypto knowledge, experience, whether it's, you're doing something in the space now, you have just a crypto interest? Half raise. Okay, so that's good. Crypto curious, you're interested in learning more about it, and okay. There you go. So we have a little bit of a mixed group here, so perfect. So we'll keep some things high level. We'll go into some weeds, and we'll see kind of where the conversations take us. Have a lot of slides, but that doesn't mean that we have to go into detail on each one of those. So I want to, again, make sure that it's engaging and that you're getting what you need from this session today. So right now, crypto has been in the news quite a bit. I think everybody, even if you are not interested in crypto, have heard something recently about it. So for that purpose, really is what I think helps people to at least have a basic working knowledge of what blockchain cryptocurrency is, and make sure that we at least are familiar with it from a basic standpoint. One thing in the industry that surprises me is the comment that cryptocurrency is unregulated. How many of you would say that you believe that statement, true or false, that it is unregulated? I'd say that's probably false, right? Cryptocurrency can have many different regulatory frameworks as well as regulators. And so on this screen here, you can see the basic framework, and we've kind of identified the SEC as a potential regulator for cryptocurrency. One thing that I like to identify here is that understanding as to is crypto a security or not. And so that has been a very big topic of discussion. And so you do get some mixed feelings, some different regulators wanting to go down the path of, is this under our purview or not? And so for a lot of the clients that we do deal with, that's a very initial and kind of basic question. Who is our regulator? And oftentimes that's a hard decision. We have many attorneys that spend quite a significant amount of time learning business models and trying to understand from that framework, is a business model to be regulated by which regulator, and then the underlying assets, who regulates those. And so this slide goes into a little detail of what we've heard is called the Howey test. Has anyone here heard of the Howey test? And so I don't want to go into a whole lot of detail, but essentially the regulators have some different standards that they can look at to determine if this token or a possible coin is a security or not. One that seems to be a pretty safe bet of no is Bitcoin. So Bitcoin, from most regulator standpoint, is deemed not to be a security. And so, again, I don't want to go into too many weeds as far as just some of this information. I want to kind of touch on the surface, and then we can circle back with additional questions. We have some other presenters later that will go into some more details in certain areas. So I do welcome you to join all the sessions about crypto today. And we can also provide the different slides as well. In addition to what we just called some of these different tokens or coins are stable coins. And so those are looked at also a little differently. You may hear a lot in the industry about different countries wanting to issue certain different stable coins. And so that is also something that is of interest to a lot of people that could be a safer alternative, something to look at as far as with your business model. And from a consumer perspective, is having stable coins something that makes sense? Is it tied to a US dollar so it's not as volatile as, say, Bitcoin or another coin or token? Okay, before I go just a little further here into some of the regulatory framework, I just want to lay the foundation that for many of us here at this conference, we're either working with or are money transmitters, money services businesses. And so this is where a lot of the decisions and the framework and the regulatory requirements will make more sense to us. From a perspective of a money transmitter and wanting to look to have options of cryptocurrency in a business model, that will be more under what we call the MSB or the Money Services Business Framework. And so that makes more sense to what I think most people in the room are more interested in and probably more familiar with that basic framework and guidance. Who here is either a money transmitter, money services business, or works with them? Okay, perfect. So here on the screen, you'll see FinCEN guidance. I'm not sure if many of you have reviewed some of this guidance before. In 2013 as well as 2019, FinCEN put out some very specific guidance about virtual currency, virtual assets, and some of the framework in regard to that. What is it? Should it be regulated? And just from that perspective, how should we report suspicious activity? And going into a little bit of deeper dive. So FinCEN absolutely has purview over cryptocurrencies, how they're reported on suspicious activity reports, and even guidance as far as if you are a money services business, if you do touch crypto. The Federal Reserve recently put out some guidance for banks. And this is very interesting because, as most of you know, as a money services business or dealing with them, bank accounts are extremely important, right? Most have either been through de-risking, have been de-risked, or know very much the issues that come with working directly with a banking partner. And so the Federal Reserve has provided guidance to these banks that you should treat anything in the cryptocurrency realm as high risk. Not saying you should not bank it or de-risk it, but they absolutely have concern over this industry sector with it being high risk, and what are some of the guardrails to have in place with that. Here we're looking at from a regulatory proposals, and some of the sessions later today are going to talk about what's on the pipeline. What are regulators looking to do as far as for additional oversight? What regulatory body will have ultimate say over the crypto world? Will it be one or will it be many? So the CFTC is one also that most definitely has a stake. And does crypto fall under their purview, the SEC? We also know that state regulators, they absolutely have jurisdiction over anything that falls under a money transmitter opportunity with crypto. And so what's interesting here is what will come, especially out of the recent news with many companies such as FTX, Voyager, and others. They're posing a risk in the industry to consumers. So let's stop there for just a moment. I want to see if anyone has any specific questions, comments, concerns, things that they have seen, or that you'd like to specifically address so far. Not everybody at once. Okay, so let's move into what, again, I feel is probably the most familiar with everyone as far as the money transmitter aspect of cryptocurrency. Most of our clients that do have some type of money transmitter business, they have crypto in it as well, they are under the purview, again, of FinCEN. And so that means that they are a money services business, and they have some of the same requirements that probably you're very familiar with also. You have to register with FinCEN. You have to also have a compliance program and all the same bells and whistles that you would as a typical money transmitter. So, question of the day. For money services business registrations, can you unregister? You cannot. You cannot unregister. You cannot renew. But many companies that go down that path, it's very important that you do fully understand the regulatory requirements and the legal aspect. So we very much guide our clients that it's a very important step if you do register with FinCEN, indicating you're a money services business or a money transmitter. You in the crypto world or otherwise, that you're very familiar with if that requirement is applicable to you or not, because you cannot unregister. You can just not renew, but when you do register, you have the same requirements that you would if you kind of went down that full path. So it's very easy to find out if a company also is registered. So many of you may be familiar with the FinCEN search. We do look at this very often to see if companies are registered. And so from a risk perspective as well, you can look to see if an exchange or a company is registered with FinCEN. You can look to determine that from a risk perspective, whether you're a consumer wanting to conduct business with a particular money services business, or if you're a bank and you're wanting to possibly conduct due diligence. This is just a very helpful search tool that I'm sure probably many of you are very familiar with. State licensing requirements. So as we discussed, there are many different regulators for a crypto business that would be considered a money transmitter or a money services business. How many are you very familiar with the BIT license requirements, for example? Have you heard of those before? New York has very extensive licensing requirements, and they are known as to being kind of the ones who set the stage for licensing cryptocurrency. Many other states are starting to look and possibly follow suit as well. You do have some states that also do not specifically license cryptocurrency. And so this is where it can get very complicated, and I'm sure many of those who may have went down this path from a traditional money transmitter perspective in a business model, it can be very confusing and take a lot of time and effort to determine if a business model is in fact to be licensed at the state level for cryptocurrency. Any questions regarding that or any comments that anyone would like to make? Okay. State licensing can be a very, very costly endeavor. It can also and sometimes be unnecessary. So again, this is why it's extremely important, no matter the business model, whether it's cryptocurrency or money transmission, to one, know your requirements, have legal guidance to fully understand if a license is required, and then continue with the process of going down that path of full licensing or not. So in addition to that state level requirements, the Bank Secrecy Act. So for our money transmitters that have that crypto component, it's very important to also understand the Bank Secrecy Act requirements. What we don't want to see is, especially money transmitters that are already in the space, feeling that their BSA program can fit the needs. So if you do have cryptocurrency that you're adding to your business model, or even if you're new into the industry, what's very important is that you have a custom AML program that is designed specifically for the business model. So there are some very important nuances in addition to the standards. So some of the 4 pillars of a compliance program that I'm sure many of you already know. Does anyone want to name any of the 4 pillars of a compliance program? I don't think you all have had your coffee yet. Yes, compliance officer. So with that first one, so what about a qualified compliance officer? We have a lot of regulators starting to hone in on the qualifications of the compliance officer. So is it helpful to have someone that has industry experience, possibly a certification? So we do have many clients that have been written up in examinations for recommendations that their compliance officers need additional training for either cryptocurrency, or they're coming from a traditional model such as banking, and they're not yet very familiar with the MSB requirements. So that's something to keep in mind. Another of the 4, we have one down. Training. Thank you. Yes, and so training is extremely important, especially to ensure that the training is not necessarily off the shelf, that the training is specific to the business model, and that also, in addition to just not being specific to the business model, but being tailored to the job and to the type of person taking the training. For example, the board of directors, they probably have a different interest in training than, say, frontline workers. So you need to have custom training specific to the job function. Okay, 2 down, 2 to go. Yes, exactly. So you need to have your AML program, you have the system of internal controls, right? So what are internal controls? For an MSB, is a risk assessment a required internal control? I would argue that a formalized written risk assessment for MSBs is not technically required. However, a risk-based AML program is. And so it can be argued that if you have a risk-based AML program, you should in fact have a risk assessment with that. Other internal controls, policies and procedures, right? That goes along with that. Additionally, an independent review, independent testing. Is it independent testing if the compliance officer or their employee conducts the independent testing? It's not independent testing. It does not necessarily have to be outside the organization. However, it does need to be independent testing by someone qualified. Some internal controls that be more specific to the crypto industry. What about blockchain analytics? Has anyone heard that term? So in addition to your fiat transaction monitoring or just your traditional transaction monitoring, you need to be able to understand the crypto-specific transaction monitoring. So there are many different service providers out there. A couple of the larger names that most people have heard, Chain Analysis, Elliptic, TRM Labs. They're very great companies that can provide that additional transaction monitoring specific for the crypto industry. What about OFAC? That's not part of BSA AML. However, that should be part of or inclusive or in addition to your BSA AML program. But is there anything different for crypto with regard to OFAC? Yes, there is. The SDN list now includes wallet addresses. So in addition to checking your names on that SDN list, it's very critical that you do check the wallet addresses to ensure that you're not sending funds to a blocked wallet address. Suspicious activity reporting. So that would be part of your policies and procedures, your internal controls. But what some of our clients fail to recognize is the guidance from FinCEN that is very specific to cryptocurrency or virtual assets as they specifically define. And so some of that information is how you report the suspicious activity. So I'm not sure if many of you are aware, but there are very specific pieces of information that FinCEN asks you to include in the suspicious activity reports if it is virtual currency or virtual assets related. Are CTRs important? Well, so technically some states do have requirements that are similar to the CTR requirement that is virtual currency equivalent to the more than $10,000 CTR requirement. So while the traditional CTR requirement is for fiat transactions, so if you think of paper, coins, and money, some states like New York do require you to report CTR transactions greater than $10,000. So as you can see, it's very important to know that there are some distinct differences when you're looking at cryptocurrency requirements versus maybe your more traditional BSA AML requirements for a money transmitter. Virtual transaction reports. So there's a proposed rule that would essentially have you to file value transaction reports, which include the information here on your screen. Yes?
For the state requirements, would New York State, as far as similar to the STAR requirements, does New York State also have a benchmark for that as well?
So they have a distinct benchmark for the CTR requirement. They do not require you currently to send in a copy of your suspicious activity reports.
Which states would you consider to be like the model?
Definitely New York would be the model. Amy, would you like to add anything additional, or Joe?
I would note that as a former regulator, that all regulators do have access to your SAR reports. So they may or may not be looking at them and make sure
Yep. And so many states do still have old requirements also for duplicate SAR filing requirements. However, my experience, and Amy, you might want to speak to this as well, they do not require you to continue filing those duplicate SAR filing requirements to the state because, to her point, they do have access to get those from FinCEN. Okay, so there's a lot of additional requirements as well from a federal level that touch on cybercrime, cybersecurity, virtual currency. So as you can see, it's definitely something that's becoming more of interest to the regulators for how to handle what we see also from our perspective, which the Bates Group, we are consultants, but we also act as outsourced compliance officers. So for me, I have definitely a unique perspective in getting to work in-house as an outsourced CCO, but also at times as an independent auditor as well. So you get to see so many different perspectives from what are these companies actually seeing? What are the risks associated with this industry sector? And for me, it's very interesting because you would think that, for example, a cryptocurrency exchange, would it be so far and crazy and beyond what you quote normal or traditional money transmitters or MSBs would see? And from my experience being on the inside, a lot is very similar to what a traditional money transmitter would see. There are a lot of opportunities for just fraudulent transactions and scams that would be very similar to the fiat or the normal scams that you would see. For anyone that's in the audience, if you have any additional kind of comments, thoughts, examples of things that you're seeing, feel free to weigh in. I would say that there's a lot of good information also from the FinCEN SAR statistics that you can review. So you do get a lot of insight as to the types of suspicious activity reports that are filed. Sadly, there is a lot of, I'd say, crypto-specific suspicious activity that would be different than your traditional side that does relate to human trafficking. It does relate to child abuse material, as well as information being sold on the dark web, such as identities, where you can purchase a new clean ID. And so those are some things that you do see that are specific to more so the crypto industry with exchanges and so forth. And then again, that's where your blockchain analytics does come into play also. Ransomware attacks, that's another that would be kind of very specific in what you see being highlighted as concerns from a federal regulatory perspective as well. Okay, so FinCEN's increased AML focus on virtual currency. Here is just another example from 2001, the hiring of additional personnel. And then just reiterating the focus with virtual currency and making sure that there are ample controls within an organization for monitoring suspicious activity. One thing that is very interesting and unique, some of our clients have received IRS Title 31 examinations. How many in this room have been on the receiving side of a Title 31 exam? Anybody here? Nope. So they are a lot of fun to go through. I'm kidding, of course. So the Title 31 examinations with the IRS, essentially the IRS has the authority to conduct examinations for BSA compliance. And so the Title 31 exams do look at BSA, AML compliance, and ensuring that everything is lined up with regulatory requirements. There has been, in my opinion, from working with some of our clients, a recent push and interest from the IRS specifically into the world of virtual assets, exchange providers, and so forth. So just like money transmitters, the crypto exchange providers, and others in the crypto space, they have been undergoing these Title 31 exams to ensure there is BSA AML compliance. So they're definitely on the receiving end as well as your traditional money transmitters. Okay, so this is just another slide here noting the AML Act of 2020 and just expanding to ensure that virtual currency is specifically addressed with definitions and just the additional considerations for what that means from a compliance perspective. Risk mitigation. This is always a fun topic because to me it can look very different for different institutions, right? So no two companies are the same, whether you are a traditional money transmitter or MSB, or you are in the crypto space. And so how would you mitigate risk in the crypto world? So here are a few things that we have identified. How will crypto impact onboarding, customer due diligence, transaction monitoring? Some of these we've talked about. We'll look at them in a little bit more detail here. So what type of staff and resources will you need? Again, this kind of goes back to your internal controls, also understanding, do you have the ample amount of people to monitor transactions, to look at OFAC, to disposition possible alerts, and then are they trained appropriately? So again, it's not that you can't bring people from different sectors of the industry. Someone from traditional finance can absolutely be successful, either at just a traditional MSB or one in crypto space. But it's all about the training and ensuring that you understand the differences with the types of transaction monitoring that should be in place, going back to the OFAC that we discussed earlier. So that's very critical to ensure that that training, again, is very specific to your staff. Also, what tools are available to assist in banks in this area? And so I bring this up just because of, again, circling back to the concern of bank partnerships. So many people, again, they go through the struggle of either obtaining a new bank account, maintaining their current banks. And we work very closely with many of the large banks that are very much in this sector here, whether it's Silvergate, Cross River, some of those folks. And we try to really understand so we can help our clients to know, what are you looking for? What are your concerns? And we also can help with those banking relationships. And so from a banking perspective, ensuring that you do have the internal controls, you do have the blockchain analytics covered, also ensuring that you have someone that's qualified to do the reviews are very critical points for them. One thing that is also very unique to the crypto area is risk rating. So this is kind of one of these requirements that you do see in the industry. And so you can look at it from different perspectives. So one, customer risk rating. That is very key with maintaining a banking relationship. So who are your high-risk customers? And then also, what about the coins that you would have listed? Not all coins or tokens are created equally. And to a bank or to a regulator, that is absolutely key. So New York, for example, I know we keep going back to the good New York here. They do have a short list of what they consider to be their go-to coins or their safe coins, if you will. And so that is very much what some of the banks also look at, is which coins are known to be more available within the industry. So are there liquidity issues with a particular coin? Has a company looked at any concerns from a privacy standpoint? And how do you risk rate those coins and then tie it also into your transaction monitoring for your customers? So that can be very much a deep dive, but these are some of the nuances that your bank partners are looking at if you are involved in crypto. I want to stop there and see if there's any questions, comments about the risk rating from a perspective of what you allow on an exchange, a platform, or risk rating customers. Okay. One thing to note here too is that not all companies are created equal. And so many of the banks are also looking at risk rating of the crypto providers. And so there are some of the blockchain analytic companies out there like TRM Labs that do offer services not just to banks and financial institutions, but they risk rate. So they can fully understand, has this exchange been in the news? So they look at negative news similar to what you may look at when you're onboarding a customer. Are there other risk factors? Have they filed for bankruptcy? Do they have any enforcement actions? And so they will absolutely look at these details, and the same for anyone looking to bank with them. So these are some of the pieces of information that really come together for your bank partners. Another question, will banks be issuing digital currencies And what is the future of crypto as you see it? So there has been recent news about some of the larger banks getting more involved into the crypto space, whether it is banking crypto, custodying the crypto, so them being allowed to manage the crypto assets, and or them issuing their own digital currencies. So this is very much still, I think, a lot to be developed within the next coming years. We do have one bank client in particular. They are a regional bank, and they're looking to create their own stablecoin. So it's very interesting seeing the banks also jump into the space, especially as we look at what's more traditionally known as the money services business or area that they're trying to play in, if you will. Yes?
What's the bank regulator's stance on issuing, banks issuing crypto, or what are their main concerns?
Yeah, so there is absolutely, from what we've been seeing, a lot of concern from the federal regulators as far as the oversight, how will they manage the process from a risk perspective also, what does that mean to kind of the full banking model. And so for the one client that we have, they've been working very closely with their regulators every step of the way. They do have some concerns as far as how will they manage from also just a purely onboarding perspective. So a lot of their regulators' concerns are more on the how-to and the infrastructure side, not the don't do it. And so they're probably, I'd say, in the 11th hour of getting there, but they're not quite at the launch stage yet. So I think also with the recent news, it'll be very interesting to see where that comes along. Joe, Amy, does anyone else have anything to add from what you've seen from that perspective with the traditional banks? I don't want to put anyone on the spot. Just want to see if anyone has any additional comments.
I wouldn't be surprised if someone did step in at the federal level and watch all that.
Yep. So definitely still a lot to, I think, be seen from where things are at that federal level with issuing those. I won't go into too much detail here because I know that, yes, sir, please.
Yeah, I want to go back to the previous point. I mean, the crypto change or crypto service business, besides by checking the IP or screening the wallet out, which is coming from an easy. What different questions can do that on the onboarding side, like compared to, for example, just a digital wallet?
So, I'm sorry, can you just repeat that one more time? I want to make sure I got it.
Like going back to the previous question,
Yep.
to the previous point, like besides checking the IP address to the user or screening the wallet addresses, what different questions would you add in onboarding, like compared to a digital wallet on a crypto business, for example?
So you want to know more from that initial perspective, what would be the due diligence of, from what perspective? So are you looking at it from a consumer perspective or from you as a business perspective?
Just a retail customer, like what different questions would you ask that person compared to, for example, just a PayPal or just a digital wallet? You actually open a
Gotcha. And so what we see is that many of it's going to be very similar, and it's going to be also based upon the risk profile of the company. And so some will like to ask questions that are more along the side of securities. So what is the source of funds? Also trying to get more information from that KYC perspective. But in all reality, for many of these customers operating in this money services business space, they are very similar and licensed in the same way. So they don't have any more or less technical obligations if they are a money services business. So that's where it's going to be risk management. So it's going to be how are you ensuring that you know your customer? And so many of the exchanges we do ensure that they try to have that risk-based perspective, especially when it comes to dollar thresholds. So is it that it would be more likely that you would want to have additional controls or questions for the higher dollar amounts versus the lower? And again, that's where it's going to come back to your risk. But we do definitely see more trying to lean more towards the side of looking more like securities and requirements from FINRA, where source of funds, source of wealth are important questions. But again, not a requirement as a money services business. Yep. Yes, sir.
Cross-border, so taking fiat money in country A, converting it to crypto, selling at the same within seconds on the other crypto exchange in another country, remitting the fiat money into the local network. So it's the banks in the receiving country that says, I see only a crypto transaction, and they reject the payments because all of the electronic traces have disappeared. So this has nothing to do with the regulators. This is about the banks themselves rejecting the payment because they say, I don't have any, it's not like a SWIFT, it's not kind of a API transaction, nothing. It comes from a local crypto exchange. Try that on the US dollar to Mexico corridor in the past, not current company anyway. It doesn't work. So how do you circumvent that? Because you do all your AML, you do everything, and then the receiving bank says, gracias, pero no gracias. So what happens then?
And that's where you get to, it comes down to also the education with the financial institutions, right? Who is crypto friendly and who is not? Who is willing, not many are crypto friendly, right? There's more and more becoming that way, but to your point, it's not necessarily that it's wrong or that you're not meeting requirements. A lot of what we do in the crypto space is all about regulator expectations and bank partner requirements. Those are absolutely more of the tougher requirements to meet versus your true black and white BSA AML compliance program requirements. And that's where we really do try to work with the banks to educate them on the risk versus, and also rewards, of the crypto space, because it definitely goes both ways. But at the end of the day, you are absolutely correct in that that is a bigger piece of the puzzle, and I think it also ties to the travel rule requirements. I know probably many of you here understand the travel rule. It's very difficult in the crypto world to comply with the travel rule. Most exchanges, they don't, or they have controls in place for dollar threshold amounts, or they do the best they can where they collect the information, but they don't necessarily let it travel with the transaction. And so that's also one concern, and why, honestly, I think a lot of banks also kind of have that fear as well, because it's not on the SWIFT network. It's not like you can also have a money transmission, funds flow from one money transmitter to another, say if it's just a Western Union to Western Union, where it's very easy to comply with some of the transactions. These blockchain transactions, they are not situated in the exact same way. So I think part of it is the unknown can also be scary to these financial institutions.
Just that.
Yes, absolutely. So the Financial Action Task Force is absolutely another kind of piece of the puzzle when you look at the international requirements, right? Because just like the U.S. with the travel rule requirements, there are similar travel rule requirements from a FATF perspective. And so the funds going internationally is also a concern from that crypto blockchain perspective. It's not just a U.S.-centric concern that we have there. Any other questions, comments? I know we're about running out of time here. There'll be some more discussion about the fun world of the enforcement actions, things that we've seen in the industry as well. Want to see if there's any additional questions, comments, things that are top of mind for you guys here as we're about to wrap up. Yes, sir.
Are we discussing the FTX situation?
Let's see. Joe, are we going to discuss FTX later? Yeah, high level. Okay, so that can be a discussion for a coffee break. I would love to have that conversation with you. Okay. Thank you all for joining the session.